Hello dear algorithms traders. Since we retailers are not able to move the markets, we have to let the big players take us in the right direction. But for that we need in-depth information on how the big players work and how they proceed. In today's post, we're going to look at how Goldman Sachs works and derive interesting insights that we can apply to trading. In the last year in particular, Goldman made a number of mistakes that will make our trading lives easier in the future. In today's article we will discuss which mistakes these were in detail and which advantages we can derive from them. We already discussed Goldman's strategy in October of last year. I have tried to draw conclusions about their strategies with a detailed analysis of their numerous balance sheets. It was analyzed in what time, which profits or losses were achieved, and all factors such as RRR, profit quotas and effective efficiency were calculated. After doing a lot of calculations, I made a clear prognosis for the year 2022. To increase future efficiency, Goldman would need to massively increase its big wins, hold on to the middle winners, and cut the small wins. And that's exactly what Goldman was doing, but made a few mistakes that spoiled their efficiency. First, let's take a look at Goldman Sachs' outward appearance. In 2022, you've achieved your highest daily earnings expectation since 2010. It also achieved the second highest earnings before losses, and the net expected value was even the fifth best in 13 years. At first glance, this all looks very positive, but exactly the opposite is the case. Goldman has been able to continuously increase its total assets and sales in recent years. In terms of total assets and sales, there are clear upward trends. Profits have also been increased in recent years, although there was a massive setback last year. The number of employees has more than doubled since 2005, but due to the massive drop in sales, they are now considering cutting a few thousand jobs again. If we now look at the turnover generated in the trading division, we can see a slight decrease overall, although the trading profit has even increased in recent years. Let's take a look at the trading share of Goldman Sachs' total turnover. While total turnover has increased slightly in recent years, the trading share of total turnover has gradually halved. If we now apply the entire cost ratio for employees and technology to the trading area, the effective trading profits are significantly reduced. Here we see the trading profits and the resulting net result. About 75% of the income is destroyed by costs and depreciation. Imagine doing 10 trades a day with one lot with a win rate of 60%. This corresponds to an annual profit of 140,000 euros, minus the loss and tax you get 50,000 euros. This corresponds to a monthly net of 4,000 euros. If you now had a cost rate of 75%, you would end up with only 1,000 euro net left over. I think trading would then no longer be worthwhile. Basically, Goldman Sachs is one of the best traders worldwide, as can be clearly seen here from the monthly return. But here, too, there is a slight downward trend. First of all, the win and loss days are looking very positive. A win rate of 87.6% is a sensationally good performance and is only achieved by very few retailers. But I also wanted to look behind the scenes and created a very complex calculation that analyzed how much money was earned or lost in which time. This resulted in this profit and loss matrix, with this increase in losses making for an absolute disaster. Goldman posts daily profit of $46.4 million. Basically, if we look at the profit of $50.9 million from 2022, one would think that they did everything right. In order to achieve high efficiency, Goldman should achieve the highest possible profits and at the same time only small losses. You have definitely achieved the goal of high profits in 2022. Unfortunately, some things went wrong in the area of losses, which pushed their overall efficiency into the basement. Now let's look at the 5 different wins and losses. The very big wins have been increased, that's a definite plus. The big wins have been reduced, for this there is a clear minus. The middle winners were reduced, which is also a minus. The small gains were maintained, which is also not an increase. And the very small profits were reduced, unfortunately also a minus point. On the other hand, the very large losses have been massively increased, which also gives minus points. Likewise, the large losses were massively increased, which is also acknowledged with a minus. The average losses were smaller, which is a clear plus. The small losses have been reduced, which is positive, and the very small losses have even been massively reduced, which is also very positive. The valuations of gains and losses cancel each other out. The very big wins have been increased, but so have the very big losses. We can also offset these two factors against each other. At the end, there are the big wins that have been reduced, and at the same time, the big losses that have been increased. That shows in the end why the efficiency in 2022 was not so good. Here in the overview, we see again the increase in the big wins and at the same time, the increase in the big losses. Of course, the total wins were significantly higher than the total losses, but there have never been such large losses. Average daily gains were 74.6 million and average losses were 90.28 million. However, there were 221 winning days and only 31 losing days. From this you can calculate a theoretical risk-reward ratio, knowing that the big players work without stops. Over the past 13 years, the average theoretical RRR is 2.34. That means in 2022, Goldman took a triple risk and ended up earning 10% less. Here we see again the theoretical RRR within the last 13 years. We all know the smaller the RRR, the harder it is to absorb future losses. Next, the gains and losses were weighted. That means how much profit or loss was made within what time. Here we see the weighted gains, the weighted losses and the resulting ratio. The highest efficiency was achieved in 2012, 2013, and 2019. Goldman has lost a lot of ground in the area of the weighted profit and loss ratio. Here we see the total earnings for a year, with last year having the second highest earnings. However, at the same time there were the highest losses. The losses in 2022 were just as high as the cumulative total losses in the years 2017 to 2021. This of course resulted in a significantly lower profit. By the way, in 2010, with the same income, Goldman earned 25% more. From 2010 to 2017 the winnings got smaller and in the last 5 years the winnings could only be increased twice. It appears Goldman is struggling to keep growing profits. So you've decided to take 3 times the risk to lock in the gains. Overall, the days lost have gone up significantly and the losses have quadrupled compared to previous years. These extreme effects can be seen here again, which means that the losses have been increasing since 2012. In terms of overall efficiency, Goldman has had its second worst performance in the last 13 years. Shareholders can only hope that Goldman finds a way to end this downtrend. Goldman is undoubtedly one of the best traders in the world, and the question that arises is why has Goldman failed so badly over the past year? Of course, one aspect could have to do with market volatility. Here we see daily volatility in Eurist, with 100% representing the average volatility since 1989. Up until 2011 volatility was always well above average, and since 2012 it has fallen sharply. Let's look at that for the sales figures we have from Goldman. We see that from 2010 to 2016, volatility was 40% higher than in subsequent years. If we now compare Goldman's efficiency with the prevailing volatility, we see that there are certain connections here. Next, I once gave grades from 1 to 6 for efficiency of their balance sheet profits. Then for the losses, the winning days percentage, how much total losses were made, the theoretical RRR, the daily expected value and the overall efficiency. Overall, it can also be stated here that Goldman did not meet the expectations of investors in the past year. They have increased their income significantly, but at the same time destroyed everything again with a wrong strategy. So we recognize that the efficiency and the expected value have clear connections. It is also the first time in Goldman's history that the win-money ratio has fallen below 80%. That would be a great value for us retailers, but not for a professional big player. If the volatility in a market is particularly high, this means that there are fewer big players in the market who provide the corresponding liquidity. But the more big players there are in a market who provide the appropriate liquidity, the more difficult it is for them to move the market in their direction. As Eurist volatility has plummeted over the past few months, it means there are more big players in the market. More big players in the market means that the big players find Eurist interesting. It is not for nothing that the Euro-US dollar is the largest market in the world with a turnover volume of over $2 trillion per day. If there are more big players in the market, this means that the collection campaigns take significantly longer and it takes the big players longer to make a profit. From 2008 to 2015, there was significantly more volatility in the Euro-US dollar than from 2016 to the present. For us retailers, this means that the more big players there are in the market, the fewer uncontrolled outbreaks will take place, since other big players are also providing massive liquidity. These unpredictable outbreaks have always broken our necks as retailers. Of course, with lower volatility, we will reach our goal more slowly, but since most retailers are losing, this will give them an extreme advantage in losing less in the future. In addition, with lower volatility, the spread is significantly cheaper and there is less slippage. With a wide spread, it takes an average of 60.2 seconds to break even in Eurist. With a lower spread, this is even possible in 37.8 seconds. This is also a decisive advantage for us retailers. With a high spread, a retailer earns €12,400 in this case. With a low spread, it's already €17,200. That's a total of 40% more net win, all other factors being equal. The more big players there are in the market, the higher the risks the other big players have to take. See Goldman in 2022, who took 3 times the risk and earned 10% less. In addition, the big players are losing more money and the retailers can therefore earn more money. In 2021, Goldman had a 0.26% chance of very big losses and 0.43% chance of big losses. Due to massive mistakes in the last year, the loss probability of the very large losses has deteriorated threefold, and at the same time, the loss probability of the large losses has doubled. A decisive advantage for me: the higher the liquidity, the better my Bionic Candle works. This means that the more big players there are in the market, the more efficiently you can use the Bionic Candle to draw reversal zones in the chart. If you don't know the Bionic Candle yet, you can get the candle I developed free of charge from Adas in MT4 and MT5. You can find more information about this in the video, Projekt Bionic Zones. Since we retailers cannot move the market in our direction, we have to let the big players take us with them. This is exactly why it is so important to know how the big players work and what measures they use to move the markets. Significantly more big players are currently trading in euros and dollars, which at the same time leads to lower volatility. The big players take longer to collect their contracts and longer to exit. Therefore, longer trend phases could arise, which are advantageous for us retailers. The more big players there are on the market, the higher their losses are automatically, since they can move the market in their direction much less than usual. This automatically increases the opportunities for us retailers. I'll keep my fingers crossed that you too can take advantage of these opportunities, and I look forward to seeing you here again soon. Best regards, Michael.